Hi everyone, in this video I'm going to do a deep dive into Unity Software's conference call following its third quarter results. So let's get right into it. It starts with John Riccitiello, the company's CEO, talking about the IronSource acquisition to Unity, saying they'll start reporting consolidated results starting the fourth quarter. So starting the fourth quarter, you'll see Unity showing revenue growth from IronSource, and I'll talk about this a little bit later. That's going to make Unity Software's revenue growth look better than it actually is in the fourth quarter if it was going to report just organic results without the acquisition included. Moving on, he says, we expect to we expect to achieve success through an end-to-end platform that enables creators to build better games and better user acquisition and everything in between by solving our customers' toughest problems. So they want to be an end-to-end solution for game creators. They want creators to be able to create the games and monetize all with Unity software. And goes on to talk about total revenue in the third quarter was 323 million. This was up by 13% year over year. The operate segment was the one that held growth back. This was the segment, remember, the company had data issues with. This segment delivered 172 million in revenue. That was down 7% year over year, so a revenue decrease year over year for this fast growing company, but that was just from the operate segment. Overall revenue increased by 13% in the quarter. Diving into the create segment, says that we are enabling our customers to create extraordinary real-time 3D experiences in games and across industries, which we believe will accelerate their growth. And that's true. If you've looked at some of the games and some of the video that's been created using Unity Software's technology, it's truly amazing. It's remarkable how realistic and inspiring these creations appear. One of those creations was Marvel Snap, which is currently #1 on the iOS and Android App Store. And you can see this across the board. So many of the top performing games, mobile games, console games, virtual reality games, are created using Unity Software's platform. So there is excellent performance and evidence of excellent performance of its software in the marketplace. Another one is a film called, or a series, Raised by Wolves, which is on HBO Max, and from executive producer Ridley Scott. It used Unity Software's platform to create some awesome visual effects. If you haven't seen that yet, I recommend you check it out. It has some awesome visual effects. Interestingly, the management noted that they raised prices between 13% and 25% across some of their offerings. This was their first significant price change in 3 years. So it's encouraging for Unity stock investors to see management feeling confident in its pricing power and raising prices. Now, they also noted that you won't feel the effects of these increases until next year, but for now, it's good news that they implemented these increases, and going forward, this is something I'm going to be watching over the next few quarters, is how it starts to affect revenue growth. Is it going to hurt customer growth, or is it going to be accretive to the top line and increase revenue? That remains to be seen. We'll keep an eye on that. I'll definitely keep an eye on that over the next few quarters. Moving on to the operate segment, which is the one the company had issues with, and management addresses it right off the bat. Looking at 2022 as a whole, there is no doubt that the ads side of Unity Operate has experienced a challenging year. But in 2022, we experienced the operational challenges we have described on prior calls. This is the data issues, the data corruption problems. Management is saying these problems have been addressed and they're now in the rear view mirror. Okay, so good news for Unity stock investors that they addressed these problems, and partly that was what led to the IronSource acquisition, is to address these problems in data processing in data recognition and data utilization. In September, they introduced multiplay and matchmaker self-serve. Until now, building multiplayer functionality for mobile games was too complex. With the launch of these two self-serve products, we solved this difficult networking challenge and made the technology easy to provision and manage at scale for developers and studios of all sizes. Of course, for users playing games, the multiplayer games are more exciting and more engaging. You see this on PCs and consoles, but not so much on mobile apps. But now that it's been available on mobile apps, you'll see more engagement on mobile gaming devices because it's just more fun to be able to go online and play against a bunch of other people instead of just playing against the artificial intelligence or playing against the offline AI as well. And now management goes on to talk about the current softness in the advertising market. They estimate that overall in-game ads growth was approximately 10% year over year in the second quarter, and that slowed to single-digit growth in the third quarter, and they currently expect the sector will be flat in the fourth quarter. So ad revenue is not going to grow in the fourth quarter for the overall ad industry. And I follow several companies that derive significant revenues from advertising, including Meta Platforms, Alphabet, Pinterest, Snapchat, Roku. And I will tell you that the theme across all of those companies was that advertisers are pulling back spending. So this wasn't unique for Unity platforms to call out a slowdown in advertising spending. This has been the case industry-wide for all companies that rely on advertising revenue. They've all been saying that advertisers are pulling back spending as they are afraid of an upcoming recession, as they are uncertain about the war in Ukraine. They are pulling back spending and taking a wait-and-see approach. What was new starting late in the third quarter was that the cost per impressions declined both on mobile and operating systems. And again, this is not unique to Unity platforms. Alphabet and Meta Platforms, two mega giant advertising companies, also reported decreasing prices for advertisement. The price per advertisement shown to folks is decreasing. And this is a bit of encouraging news for Unity Software stock investors. Management reiterated its long-term growth outlook of 30% top-line revenue growth over the long run sustainably, but they're saying don't expect 30% growth in 2023. So we haven't yet given you 2023 guidance, but management is saying when we do give you the guidance at the end of our fourth quarter, don't expect that to be greater than 30%. So yes, longer term, we expect we can grow over 30%, but 2023 is going to be a challenging year. We don't think we're going to grow at 30% in 2023. Still, overall, this is encouraging news for Unity Software stock investors. The longer term growth rate is more important than the growth rate of just 1 year. The fact that they reiterated the long-term outlook of 30% should be encouraging to Unity Software stock investors. Moving on, management says that they expect to significantly over-deliver against our $100 million cost-saving plan discussed at the end of the second quarter. Again, prudent financial management here. The company had instituted cost-saving programs to cope with slowing revenue growth, and they were planning for $100 million in cost savings. It looks like they're going to be able to achieve more than that. And looking at the fourth quarter guidance of between 425 and 445 million, and the full year guidance of 1.36 billion and 1.38 billion. Overall, this is down about 60 million from the previous guidance, so they downgraded their guidance for the year. And this is due, of course, to slowing advertising revenue growth, slowing spending in game purchasing, and just slowing activity overall for Unity Software. So this was bad news for Unity Software stock investors to see this downgrade in the revenue outlook for the full year 2022. And with the IronSource merger, the company issued 113 million shares. In addition, they issued $1 billion of convertible notes with a 2% interest rate and a $48.89 conversion price. They now expect to have 416 million basic shares outstanding and 562 million fully diluted shares at the end of the fourth quarter. So significant dilution of existing shareholders in order to pay for this acquisition of IronSource. And so shareholders can expect when the company does eventually become profitable, delivering earnings per share, that earnings per share is going to be split among more shares outstanding, and so earnings per share for each individual share will be lower than prior to this share issuance. And that's all I've got for this Unity Software earnings call deep dive. If you've enjoyed this video, if you've gained any value from it, please go ahead and hit the like and subscribe button. It'll help me make more videos just like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.